Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our fundamental video. Let's focus on the Fed's reaction. We've seen 50 basis point cut by the Fed, the largest emergency interest rate cut since the financial crisis. Of course, the markets were going to be surprised. Of course, we were going to see enormous amount of volatility because of this particular action. And yes, markets went bonkers because we saw that enormous amount of a move in the Dow Jones and in the S&P 500 index. The question right now is, was that an overreaction by the Fed or was there a necessity for it? From my own personal perspective, I think the Fed used too much ammunition too early and too fast. Why? First of all, there's not too much room to the downside. If the economic numbers continue to weaken, where are we going to go from here? Are we going to follow Bank of Japan or European Central Bank? If yes, then yeah, plenty of room left for that. But if not, then we are really in a tight spot with that respect. Secondly, investors were just really pleased with the fact that the Federal Reserve is providing the support, and that pushed the US markets higher, and this initially, but then there was a huge sell-off. Like I said, the market just started to think all of a sudden perhaps there is something bigger to worry about, and they don't know. If we look at the economic numbers, they do not support the evidence that we need to worry about something being more significant, because the economic numbers over in the US, they are still pretty much solid. But if we focus on the Chinese economic data, the picture looks very different, because over there, as per the recent Chinese Goods and Services PMI, or the new car sales, or the factory orders, numbers, no matter how you look at it, the weakness is all over the place. In fact, some of these numbers have dropped to a record low or to a level which we have not seen that at all. So yes, there's enormous amount of a stimulus needed from the PBOC, but if the Fed has provided extra stimulus to soften the blow right now and they wanted to hold for later on, that remains something that we need to see. But for now, I think European markets, the sentiment over in Europe is that, okay, Fed is there, the central banks are there, and then it's happy days. So let's continue, let's take this as an opportunity, the recent sell-off I'm referring to, and push the markets higher. And hence the FTSE, the DAX, the FTSE MIB, all of the major European indices are trading to the upside, and this remains the trend for now. The second question, and more importantly, do I believe in this upward move? Certainly not, because I think the economic numbers are going to influence the economic data over in the UK and over in Europe, also in the US as well. And because of that, this dead cat bounce isn't going to be a good idea from an investment perspective. So investors should be wary of it. To finish off, the economic docket is very important today. Why? Because we have the US ADP numbers coming at 1:15 UK time. If the number, where the forecast is for a lot more softer number, comes below that anticipated mark or print, then expect more dollar weakness, because then speculators are going to say that the Fed will have this dovish narrative for a prolonged period. If not, then we could expect some sort of a sell-off for a gold price, which, by the way, saw the biggest one-day increase yesterday since the financial crisis, pretty much. So keep an eye on these derivatives, keep an eye on these fundamentals, and I'll speak to you guys tomorrow. Thank you.